and welcome. You're watching a very special edition of State of the Economy. I am Snehi Shah. With me is my colleague Sajit Mangat. And well, in this edition of this show, we're going to try and decode everything that we've seen happen with the rupee, the recent rout that the rupee has seen, all the pressures that the rupee has been mounting against the dollar, the FII selling that we've seen, lots of RBI action at play as well. So we'll understand what is happening to the rupee right now and how much of this is actually going to help the rupee improve from here, if at all. But the rupee has, yes, no doubt been under pressure. After sliding over 4% in March, its worst monthly fall in more than 7 years, the currency has hit a record low of 94.84 to the dollar on Friday before staging a sharp rebound in early trade today, but then slipping from there as well. Now that's because the RBI has tightened limits on banks' forex positions, effectively forcing a $30 to $40 billion unwinding across the system. Now, in simple parlance, this means banks may now have to cut dollar positions, absorb mark-to-market losses, and unwind trades that once thrived on the gap between onshore and offshore markets. Now, this comes at a time also when yields are rising, reserves are falling, and global volatility is only intensifying. The RBI wants to arrest the rupee slide, but at what cost is the real question now. Will this forced unwinding stabilize the currency or simply shift the pressure onto banks and markets? Now, this is a conversation that we aim to have right now. We have a bunch of experts who are going to be joining us on the show as well. But Sajid, the kind of fall that we've seen on the rupee, so much pressure, the RBI has undertaken OMOs. Now, this entire order against the banks has come for their net open positions. How effective is all of this?
It's basically buying time, basically. What RBI has been trying to do is trying to, defend the rupee with spot purchases of rupee or, selling of there, and then even looking at forwards or dollar swaps. But that's not helping because globally there is a shift towards dollars and there's a demand for dollars which is coming in, and that's putting a lot of pressure for rupee, especially in the offshore market. And when I say offshore markets, it's basically the Dubai, London and Singapore markets where a lot of derivative trading happens by banks and financial institutions, and that's the pressure point for the RBI. The Friday move was a move which was unexpected for many banks, because banks normally have the headway of going up to 25% of their capital, which is tier 1 and tier 2 capital, to take offshore exposures. But that has now been reduced to net operating positions of nearly $100 million, and it is estimated that the gross positions are around 30 to 40 billion dollars. And so for every 1 rupee movement, if rupee appreciate by 1, the mark to market would be to the tune of nearly 4,000 odd crores, and that is something which is weighing heavy on the banks today, because the bank index is down more than 2%, and many of the banks are down because the mark to market has to be absorbed in Q4 numbers, and that loss will appear as part of that for many banks. Remember that even the 10-year benchmark has fallen by nearly has gone up to nearly 6.94. That's a jump of nearly 35 basis points, which basically means that even bond prices have fallen in this quarter, and that loss is also going to come on many of the banks going forward. So a combination of these factors are at play. RBI has been able to do initial work of getting the rupee back, but again the rupee is heading back, and the differential between the NDF and this market today as we speak is around 15 to 20 basis points, which was as big as 75 to 90 basis points before the RBI action.
Okay, so seems like the RBI action has worked to a certain extent, but we still have to see that kind of positive momentum on the rupee. We're still waiting for that. But having spoken of that, what is the impact when it comes to all the business back home? How does the rupee momentum change everyday lives? Let's take it across to my colleague Ankur Mishra. He's in conversation right now with Mr. Abhishek Goenka of IFA. Ankur, over to you.
Yes, I am right there at the IFA Global trying to understand what is the impact of the circular, and many of the market participants were actually confused what will be the impact. And here at ET Now we thought of going to the office itself and understand from Abhishek Goenka. Abhishek, first of all, thank you for joining and speaking to us at a time when I'm sure you must be getting many calls. First and foremost, today's rupee reaction, how do you interpret? We opened around 93.6, then going past 94. What do you think is playing behind the scenes?
So Ankur, it's very tricky, frankly. RBI has been intervening aggressively in the market from the last many days. There is a lot of short dollar positions of RBI. They've already built close to $100 billion. Now, time and again, in my experience over the last 20-25 years, whenever RBI falls short of the simple measures, they come all in. And they have been talking to a lot of AD banks,
Right.
And these AD banks, they have been checking with their positions, and finally they have realized that a lot of arbitrage positions were being built in the banks, where they were getting some difference between spot and NDF markets. So earlier this limit was pretty high, and now they have capped it to 100 billion. Now $100 million for banks. Now they have to cut all these positions. That means on the spot market they are going to sell, and on the forward market they're going to buy. And that's the reason the market in the morning was majorly down. And in the forward markets in the NDF, we can see the difference of 1 rupee for 1 year almost.
Right.
Now, this is not something which happens very often. Last time we saw this during COVID.
Right. One thing I want to understand here, now one of the interpretation kind of a thing which is going on in market, since it is March ending, many of the positions have already been taken. So do you think it is going to play out in next 10 days, or you think the impact will be over in next 2-3 days?
No, I think this unwinding cannot happen in one day. There are close to $30 billion, and that's a lot of liquidity that's required in the market, in the spot and NDF markets both. So I think it's not going to get squared off in one day. It might take more days. But obviously once RBI have decided...
What is the level you are looking now?
See, in short term, it's actually not about RBI's action only. In short term, there is news coming from the war front.
Right.
Two things which is beyond our control completely is, one is how the war escalates. And as of now, while we are talking, the war is at an extremely high point and no parties are backing out. The second thing which is unknown is how the US Fed is going to react in terms of rates. Until they start cutting rates, our difference between India and US doesn't come down. So these are the unknown. But having said that, I have seen the crisis, 3 to 4 crises in dollar rupee.
Right.
And in 4 months in 2013, it went all the way from 56, 57 to 68. And then by next month, it was all around 59. So, and even in 2008, it went all the way from 39 to 52.
Right.
But one thing is common, that rupee on an average depreciates by around 2.5-3%. So this time around it will depreciate by 10%, and you are getting a forward premium also, which is very high. And now in NDF markets, even more higher.
Right.
Then from a medium to long term, I don't think that if you sell dollars at current level, you're going to lose.
All right, so point well taken. It will be interesting to see that how the short-term measures, if I can put it, of Reserve Bank of India can sustain over time, and over the period, the weakening of rupee needs to be seen in full context. So Snehi, as far as the dealing rooms are concerned, yes, they are cautious. They are watching market very closely.
Okay, Ankur, thanks for taking us through that, but stay on with us. In fact, let's bring on board more voices from different walks of life. First up, we have Mr. Uday Shankar Avasthi, the former MD and CEO of Indian Farmers Fertilizer Cooperative, joining us on the show. Mr. Avasthi, thank you so much for your time. Thanks for joining us today. I was just trying to understand the impact of the free fall that we've seen in the rupee of late, what it does to a sector that is extremely outward facing, like fertilizers, given a lot of the raw material is exported, is imported from overseas. What is the impact that the fertilizer space has seen so far, and any impact if you could give us in terms of how this increases the burden on the government in terms of subsidies?
Well, as far as the fertilizer is concerned, every 1 rupee increase has an impact about 15,000 crore for whole year. So I see that this impact is usually taken over by the government and it's not passed on to farmers, and also the industry is not in a position to absorb it. So usually it is passed on to government, and by government pricing is such that automatically it gets adjusted. So about 15,000 crore is the impact per rupee has on fertilizer sector.
Mr. Avasti, how do you think fertilizer companies are hedging against this rupee depreciation? Because it's increasing the cost. At the same time, you have West Asia issue, which is also increasing the cost of the fertilizers as well.
Well, as far as fertilizer industry is concerned, they are hedging, but not everybody is in a position to hedge, and not 100% is hedged. So usually, and the way the rupee is volatility is having, is very difficult to hedge by Indian companies. So ultimately, it has to be passed on to government by way of adjustment in the pricing, whether it is a pool price for the gas or it is a NBS policy for phosphatic fertilizer, but it gets absorbed by the government, and there is no impact of it on the farmer on their prices.
Okay, at least that sounds optimistic, Mr. Awasthi. Thank you so much for your time today and thanks for giving us that insight. So, viewers, what Mr. Awasthi was saying, every 1 rupee volatility that we see in the rupee, every 1 rupee move has an impact of 15,000 crores on the fertilizer space. So, that's quite profound. But, viewers, on that note, time to slip into a very short break. And on the other side, we'll be joined by two corporate voices who have a lot to do when it comes to exports as part of their core business. So, stay tuned and we'll be right back.